Kotak Mutual Fund presents Investmentor in association with Network 18.
Hello and welcome to Investmentor, a special initiative by Kotak Mahindra Mutual Fund in association with Network 18. This is an investor education awareness initiative by Kotak Mahindra Mutual Fund, and I'm Sonia Shenoy. Today on the show, we're going to discuss the benefits of investing in equity-linked savings schemes or ELSS funds. What are the tax benefits? What are the pros? What are the cons? All of this will be discussed in the next half hour with our guests, Manish Mehta, the Joint President and National Head Sales, Digital Business and Marketing at Kotak Mahindra Asset Management Company, and Harsha Upadhyay, the President and Chief Investment Officer, Equity at Kotak Mahindra Asset Management Company. Gentlemen, thank you for joining us on Investmentor this week. Manish, let me begin with you. I have several questions on ELSS funds, but let me just start with the basics. What is an ELSS scheme and what are the benefits for an investor?
ELSS, as the name suggests, equity-linked savings schemes, is a mutual fund scheme where the predominant underlying investments goes into an equity fund. That equity fund could be of any nature, which could be a large cap oriented fund, a multi-cap oriented fund. The benefit that the investor gets by investing in an ELSS fund is under the Section 80C of the Income Tax Act. Investments up to 1,50,000 rupees, one can claim tax rebate by investing in an ELSS fund. So it gives you twin advantage of tax saving for your financial year, as well as your underlying investments are going into equities, which are being parked from a long-term investment perspective. So returns over a period of time.
So Harsha, come in on this. Why would I want to invest in an ELSS fund if I'm getting tax benefits, but they're only limited to a certain extent? What are the advantages of this fund then?
Sonia, there are several other benefits of investing in an ELSS fund. Give you participation into equity market. By investing into an ELSS fund, you will get equity participation. And as we all know, as the economy grows, equity markets are expected to do better. And you will be participating in that upside as well as capturing tax benefits. The second other benefit is, if you look at the lock-in that is prescribed by the IT authorities for 80C schemes, most of the products have longer tenures. When you look at ELSS, for example, it is the shortest lock-in period that you can get in the 80C scheme, which is only 3 years. I think these are the benefits that are paying in favor of ELSS as far as 80C investments are concerned.
Let's talk about the performance of ELSS funds then.
The investment objective of the ELSS fund probably is not going to be any different from any other mutual fund scheme. So someone could be looking at investing in a multi-cap fund or a large and mid-cap fund. The ELSS fund also may have a similar investment objective of being multi-cap by nature or being large and mid-cap by nature. And if you just historically look at, say, maybe even the 10-year returns, an average returns of ELSS funds have been in the range of about 17%, where the underlying benchmark, his returns have been around close to 15%. So, ELSS have definitely, given market-related returns. And I think that myth that people have that, a normal equity fund which does better than an ELSS is not true.
Okay, thanks for busting that myth. That's important, right? But I think generally what we see, Harsha, is that because there's a tax saving element in ELSS funds, right? People rush into it at the 11th hour just while they're tax planning towards the end of the year and invest a lump sum in ELSS funds. Is that the right way to approach it, or should an investor go through the SIP route to get better returns and better tax benefits? How does one plan this?
Sonia, as we all know, usually SIP route is a better route to manage volatility. What happens when you invest in a lump sum way, whether it is an equity savings scheme or any other equity mutual fund, is the fact that your entry level valuations could be high at that point of time or low. And depending on where you are entering, your returns would be generated thereafter. However, if you are doing SIPs, then most likely that you will be able to average out this volatility and valuations and will be able to build a portfolio over different levels of valuations of the market. And that usually does better over a period of time, because you're simply not taking a bet on the entry level valuations or exit level valuations in that sense. And also it gives you a lot more discipline into overall investing because usually, as you rightly mentioned, most people try to rush in at the 11th hour. And rather than that, you can plan it over a period of time and your finances are also taken care of that way much better.
Manish, are ELSS funds way to save tax, especially for salaried employees?
ELSS is actually a good tool of investments. First of all, while the total limit of investment is 1,50,000, but one can actually invest in an ELSS fund with as low as 500 rupees to begin with. The other advantage, obviously, as Harsha also mentioned, that because the underlying investments are going in equities, because you are locked in for a period of 3 years. So it is sort of long-term in nature. So over a 3-year period of time or over 3 years or above 3 years, at least, the returns of an ELSS fund comparatively would be better. And at the same time, the tax benefit that you enjoy.
Okay, Harsha, come in on this. So what is the maximum tax benefit that one can enjoy, year after year if one invests a small, say an SIP amount, say 20,000, 30,000 per month in an ELSS scheme?
There is no limit in terms of how much you can invest into an ELSS fund, but the tax benefit is available only up to investments of an aggregate of 1,50,000 per annual year. So to that extent, you can keep making further investments into tax saving products, just like you invest in an equity mutual fund, but the overall tax deduction from your annual income that is calculated is limited to 1,50,000. And also when you withdraw the money after the lock-in of 3 years, whenever you withdraw, it is only taxed at a long-term capital gains rate, which is similar to all other equity products as well, which is at a level of 10%.
I mean, you said with an ELSS scheme, the maximum tax benefits that you can see is 1,50,000 under ATC.
Within the equity mutual funds that one can select, tax saving scheme is the one where you get ATC benefit as well as long-term capital gains at a reduced rate of 10%.
Okay, well, there are a lot of benefits, right, for investing in ELSS schemes. As you just heard, tax benefits are high as well. There's the benefit of compounding. You have an SIP option available. So we'll talk about all of that and more on the other side of the break. Slip into a short break on Investmentor, but don't go anywhere. Lots more coming up in just a bit.
Kotak Mutual Fund presents Investmentor in association with Network 18. Kotak Mutual Fund presents Investmentor in association with Network 18.
Welcome back. You're watching Investmentor, presented to you by Kotak Mahindra Mutual Fund in association with Network 18. This is an investor education and awareness initiative by Kotak Mahindra Mutual Fund, and we've been speaking to two experts, Manish Mehta and Harsha Upadhyay from Kotak Mahindra Asset Management Company. We spoke about the tax benefits before the break, but now let's talk about the step-by-step approach to investing in ELSS. Manish, let me start with you. How does one choose the right ELSS fund for your investment portfolio? I mean, if you can just break it down for us in terms of an age profile, risk appetite profile, what is the right way to go about it?
Sure. So I think the approach is no different from choosing an equity mutual fund or a fixed income mutual fund or an ELSS fund. I think the approach is very much the same. One obviously is in terms of from an investor's point of view, if that, the decision that yes, there is this tax benefit that I'm able to avail, and I need to do my tax planning. And as you also mentioned that, generally we think about ELSS only in the last quarter of the financial year, but I think one can definitely start much earlier rather than waiting till the last moment. Post that, obviously, in terms of the kind of different ELSS fund options that one can choose from, predominantly, if you see across the industry, most ELSS funds, will typically tend to run an investment strategy of a multi-cap oriented ELSS fund. So depending upon the kind of ELSS strategy one wants to go, some could be large cap oriented, some could be mid cap oriented, depending upon one's comfort that, what kind of a multi-cap fund strategy does one want to go in for. One can choose that particular fund. The investment process is no different than buying any other mutual fund. Either it is through a physical application form that you can submit at an asset management office, or through online websites of the various mutual funds, or through the financial advisor or the mutual fund distributor, or those routes who could be advising you and suggesting you where to be parking your investments in mutual funds.
Okay, got that. Harsha, come in on the benefits of investing in ELSS in terms of a time horizon point of view. Now, the redemption of ELSS schemes is not compulsory after 3 years, right? There is a minimum lock-in, minimum investment duration of 3 years, but since it's not compulsory, does that become a big benefit as well? Because, then you get to enjoy sort of the power of compounding if you invest into an ELSS scheme for the longer term?
Yes, Sonia. Usually, when you look at equity investments, longer the investment horizon, it's better in terms of managing volatility as well as compounding of returns. Same goes true for even equity-linked saving products, which are equity mutual fund products with ATC benefits. While the lock-in ends after 3 years of the investment, one can definitely continue further. And usually, equities have shown better compounding benefits over longer period of time. So there is no need to really redeem just after 3 years. One can keep investing or keep holding on to investments as long as one wishes to.
Manish, what are the ways for investors to save tax, not just under Section 80C, but 80D and 80E of the Income Tax Act? What do you suggest young investors or retail investors should do to save tax?
Sure. So under the ATC, obviously, there are options like the ELSs that we are talking about and Public Provident Fund and National Savings Certificates. But I think, it's keeping in mind that, again, I think a lot of the young investors that we are seeing, the trend is more towards ELSs because somewhere I think that conviction and that understanding that while the underlying investments are being made in equities for a long period of time, minimum 3 years, and one could potentially stay invested much longer. And they've seen historically that the returns that, an ELSS fund has generated have been better. And I think that's where the acceptability is going up and the tax benefit of long-term capital gains at 10%. The other thing that we would definitely, sort of urge people to definitely consider is health insurance, and especially in the last 1-2 years, that has become a very, very important part of it. And, I think as awareness is going up post-COVID, we do see that, a lot of people looking at inquiring about health insurance. So that is something that, one should definitely take, not leave it to chance, both for themselves and, maybe the family members at home. That's another area that, one can look at from a tax benefit perspective. The other component where, there is a tax benefit available is in case if someone has looked to, sort of invest in a property or a home. And in case if they avail of home loan facilities, then there is a tax benefit that one can claim for the EMI component that you pay towards the loan that you have taken for a property. So that's one more area that one could look to benefit in terms of, availing tax benefits by, seeking these like the home loans and those kind of products also.
Okay, so that's very helpful. All the various ways that you can save tax, and everyone looks for that, right? Otherwise, we're just scrambling towards the end of the year. Harsha, come in on this. Manish made an important point that, a lot of young investors, they prefer ELSS schemes now. But that's not the case with slightly older investors, right? I mean, what would your advice be to those investors who are still not that comfortable with ELSS schemes or with equities? How do you think, the texture could change? I mean, the young investors are a little more savvy, but what about the older ones?
Sonia, whatever Manish said is also applicable to other age groups, I would say, in terms of investments. I think one should definitely look at ELSS product. If you want to really beat inflation, there are very few asset classes which can give you inflation adjusted better returns, and equity is definitely one of them. And ELSS gives you participation through the fund into equity markets. And also another thing which is an inherent advantage of an ELSS for most retail investors is the fact that it also imparts more discipline. Just because it is locked in for 3 years, there is really not so much of following markets, NAVs on a regular basis and trying to cash in, cash out at various points of time. So it makes you look at long-term investing. So I would concur with Manish that this is good for all age groups, and everyone should be looking at some ELSS product in their portfolio so that they get tax benefit under ATC as well as participate in equity market.
Manish, did I miss out on anything? Anything more you'd want to add as, the reasons or the pros of investing into equity-linked saving schemes?
No, Sonia, well summed up by you. But yes, just again, once again, to reiterate to our viewers that, I think this particular product does give you the twin advantage. One obviously is to participate in the underlying equity markets and benefit from growth as the underlying economy continues to do well, and more importantly, the tax benefit. And one sort of a suggestion is that you can start this investment anytime during the financial year. You don't need to wait in the month of Jan, February, March. You can actually begin in April, May, and June also. And I think an SIP is also a very prudent and a good way of looking at, sort of taking exposure into an equity saving fund rather than just one-time lump sum. Because you will also be able to average out or iron out any volatility during the investment period.
Okay, well, gentlemen, thanks a lot for joining in. This was a very, very helpful discussion. Ironed out all our queries with respect to ELSS schemes. Have a safe 2022. Thanks so much for joining us. Well, with that, it is curtains down on another edition of Investmentor. Thanks so much for watching.
Kotak Mutual Fund presents Investmentor in association with Network 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Focus. Ideate. Innovate. Enable.